Yo, what's up guys? Welcome back to another YouTube video. Today we're covering the FOMC meeting that happened earlier today. What happened? What did Powell say in his speech? And how did it impact markets? What does it mean going forward? Let's dive right in. So this morning we had the FOMC meeting, which is the central bank in the U.S. And the last meeting, they were very hawkish, and hawkish means basically saying that inflation's kind of high and they might need to tighten their policy, which is bullish for the US dollar. And vice versa, when they are dovish, basically they're not as positive about inflation. They're like, maybe we don't need to do that. Then, or on the flip side, which they're not expected to do at all, if they cut rates, then that is bearish for the US dollar. But right now, we're really only concerned with them being hawkish or not, them tightening or not, them, tapering their QE, which usually happens before they increase interest rates. So they get rid of their bond and asset purchases before usually they increase interest rates. So right now, we're not even talking about increasing rates. We're talking about them pulling back on the quantitative easing. Right. So given that the Delta variant of COVID has been spreading, US, some parts are kind of locking down a bit. Things are more cautious, especially in other countries, are locking down because of it. A lot of people are expecting they're not going to be quite as hawkish as the last meeting. This is going to be sort of a placeholder, like not much happening. They're not going to backtrack too much. They're not going to say, oh, whoops, actually we're not going to tighten anytime soon. Things are terrible still. No, but also not the other way around, which, oh my gosh, things are going crazy. The economy is booming so much. We need to tighten really quickly, right? So because of this, it didn't have too much of an impact on the dollar. It was seen as a bit dovish, which is why the US dollar sold off, for his speech. Their first announcement, or the FOMC statement before Powell spoke, let's cover it here. Essentially, the market took it as a bit hawkish because they said, progress has been made. Progress continues to be made, which is a bit hawkish, right? They're seeing inflation. They're seeing that progress is being made towards their goal, which once they reach their goal means that they're going to, really start tightening policy, right? And their goal is 2% inflation, mainly. And that's what a lot of central banks look for, 2% inflation as their, per year as their benchmark. Do they hit it usually? Not at all. But, right, that's what they're going for. So, right, as we can see, dollar moved higher, right? Let's take a look here. Dollar immediately shot higher. But as Powell spoke, he sort of backtracked. He said the labor market has a ways to go, still have some ground to cover before the taper goal is reached, right? So basically he said, we're not quite there yet. So it's a bit of a placeholder, a bit dovish, but honestly, a fairly neutral meeting, right? Again, placeholder. So that caused the dollar to sell off a bit, but I expect the dollar to be sort of range bound. This isn't going to spark a ton of buying, but it's also not super bearish. I would say it's just neutral, right? The dollar might head higher, dollar might head a bit lower, but this event is not going to spark that, right? Who knows what's going to happen next? But I don't expect this event to really influence the dollar too much. Right now, I am no longer bullish on it, right? And we can see the stock market just chopped around. Again, neutral, so we shouldn't expect a huge crazy reaction, which we didn't get. Right? And we didn't get a crazy reaction from the dollar compared to the last meeting. Look at this, right? So we can see the difference in price action, right? Just up and down, not too crazy. So that's what this means, right? Again, placeholder, not giving us a ton of info, not going to change the direction of the dollar too much. So right now I'm neutral on the US dollar. And if you guys have watched my videos at all, when I'm neutral, I don't trade anything. Well, I don't trade it, whatever it is. Right now, the dollar's neutral. I'm not going to be trading dollar pairs. So basically, I'm just, boom, now no longer bullish. I was bullish, and, well, that proved to be the right bias. But now that the fundamentals have changed, right now that the Fed is sort of neutral, no longer are they hawkish, then the dollar is pretty neutral, and that essentially means going forward with my trading, I'm just not going to be trading US dollar pairs, right? I'm going to be looking at other things, what other central banks are doing for other currencies, and looking at risk sentiment, and trying to find trades there. But as far as US dollar goes, the bullish bias is no longer there. Can it continue up? 100%, right? They're still expected to taper eventually this year, or at least be more hawkish for sure, right? But the market is not going to price that in at this very second, more so towards the later part of the year. And when that happens, then there could be some nice trades, right? So it's just about taking what happens as it comes. Yes, we know for a fact pretty much that the Fed is going to be hawkish towards the later part of the year. Does that mean we're going to buy the US dollar right now? No, right? We got to have patience and wait for that to happen and see what comes. So that's about it for this video. Just a quick little recap. If you enjoyed it, hit that like button and hit that subscribe button if you want to see more videos like this. And I'll see y'all in the next one.